Good morning. Good morning. How's everybody doing? We've had this range is really working nicely for us. You know, back here in May, we called the look below and fail of 91, and we said first stop is 75.11, which is the middle of the zone. And if it gets above 75.11, we're going to 76.31, which it did, right? So now we have a look above 76.31 and fail. So our target's going to be 75.11, and then if that breaks, rotation back down. So this is a huge rotational zone for now. We have a small cost basis here between 73.76 and 74.54. We're still in distribution until we get back down into this area, okay? So you can think of this is the warehouse where we loaded up the truck, took it to the store, we sold it up here for a little bit, and now we're putting it on sale. Now, when we put it on sale, is that going to bring in buyers? This 75.11 is going to be very interesting because look at those lows. Right, so tonight our low is 75.27. We have not gotten down there yet. So that is just due to short covering. Yesterday was a good liquidation. And I remember a couple of weeks ago, someone was saying, oh, yeah, no, we use the close from the CME website. Well, that's not going to do you any good. Right? The close from 5 p.m. is the close you should be using. And there's a reason for that. Like, there's a reason why we do everything that I teach you guys. There's a business reason for it. It's not just some arbitrary reason. And the reason is we want to know where the inventory is in the last trading hour of the day. Okay? We need to know where the inventory is in the last trading hour of the day. Why? Well, because you're traders, right? And you're trading a product and you need to know where the hell it's priced. If you don't know where your inventory is priced, you'll be shorting in the wrong place and you'll be buying in the wrong place, right? It's just common sense. If I'm selling apples, I need to know how much apples are selling for. So when I go to sell an apple, if everyone's selling apples at 50 cents an apple, I'm not going to ask $5 for an apple because I'm not going to sell any, right? Just common sense, folks. Just really common sense. So if you looked at yesterday's close and you looked at the last hour of the day, the market closed, and this is a little bit of a lesson for you guys. The market closed regular trading hours here up at 75.72, right? So, but look, in the last hour, the market sold off all the way from 75.74 down to 75.42. That's a big move after hours, right? Now, I went to sleep, so I have no idea there must have been some kind of news or something, but it tells you that in Globex, right, if you had been long looking for, to buy the dip, tonight you would have been destroyed, right? So that's why we use the close from 5 p.m., right? So Travis, if you're listening, right, if you're watching these videos, that's why I told you and corrected you on to use the proper close. Do not use the CME close where they're marking the close. That is, as an inventory trader for you, that is useless. Okay? I know you're probably not on stream with us now, but that's why I tell you guys to do these things, because there's a reason and a business reason why I'm telling you guys to do things. It's not just some, oh, I'm right, so it's arbitrary, right? I want you guys to have good information so you're not trading blind, right? So you're not just, losing money unnecessarily, okay? So overnight inventory right now, we have overnight inventory is short, right? We corrected overnight inventory higher, right? We have our levels here. I'm just trying to find my stupid overnight high stickers. Where was it? Oh, here it is. Right. So here we are. We're back in yesterday's range, right? We have our little balance zone here from 31 to 37 and 3/4. Double it up to 75.50. But do you notice how I marked the seller here? From 6 hours ago, there was a seller here. The seller is there again. Okay. That's why we mark off where the sellers are going to be, so we know where to anticipate selling. Get it? It's a very simple business, right? It's a very simple business. Oh, there you are, Travis. Now, I was just talking about that close, and that's why we use the 5 p.m. close, Travis. Hope you get it, right? That's why you don't use the CME price fixing close and all that nonsense, right? Because you want to know, because this is very big information, right? That the market sold off after hours. And if you were using this close, you'd be completely, you would have no clue what's going on, right? So that's why we do things, and then we have a business reason for why we do things. Now, we just took out the overnight high by 1 tick, right? Remember that we are going to have some short covering still. The new contract, which we're going to roll over, I think, next week here, that's trading at 76.14, okay? So you can see the new contract is trading 64 points higher than we are right now. So this selling opportunity, this liquidation, is great opportunity for those traders to come in, do some short covering before the rollover, right? Now let's see where the trades are, okay? So we have let's see if we stick that 75.15. If we hold inside the previous day's range, that's what we're looking for, right? London's going to open in 8 minutes. When it does, it generally likes to come back and try and get some cheap inventory. Let's see if it comes back down and holds that 42 level. And if we stay inside yesterday's range, I'm looking for, let's go and look at the candles, right? We're going to go and mark off where the sellers are on those candles. So you're going to get selling up here. As the market goes back up, if it stays over 75.50, these are the places where you're going to be looking for sellers to come in and sell their product. Okay? Why? Because they sell size. Size sellers will always sell where they sold before. Because they know that there's going to be buyers there, that's where they're offered. Okay? This is the most simple way to manage trades. Now, if we look above 75.50 and come back in, and you're looking to short back down, right? Say you think, okay, those sellers are going to start competing there again, and we're going to push price down. Wait till we get underneath 75.49, and you'd be using 50.51 as your stop. So those are the trades that we're waiting for right now. We're waiting for acceptance over this seller, or we're looking for the market to retrace now and have a little bit of a sale. Okay? Pretty simple. Right now, I would not enter a trade until the market shows me its hand a little bit, right? Everybody wants to short, but what you're doing now is you're going to watch that red line, the offer. If the offer starts moving up, the sellers are trying to tell us, hey, we see buyers coming in. And because we see buyers coming in, we're going to raise price. That is something you do not want to short. Does this make sense to you guys? You guys understand what I'm saying? See? Cool. Okay. So they're raising price. As price moves higher, it becomes very, very difficult to short a market when they're raising price because they're trying to tell you, hey, we're seeing buyers, right? You don't want to short a market that buyers are coming into. You want to short a market where sellers are putting price on sale. So right now, you have a frame of reference at 75.50 and a quarter. And if sellers are not putting the price on sale underneath that, there's no reason to be short, right? Now, where you get stuck is the price action. The price action looks slow. So what you have to do now is you have to focus, right? Don't try and put your opinion on this. It's one of the hardest things to do for people because what they want to do is they want to think, oh, hey, this should be going lower, right? But do you see how where that old seller was at 51 and a quarter? Do you see how we did a look below and fail of that? Watch the offer. I'm gonna zoom in on this, and I want you to watch that offer. You see how the offer is moving higher? This is the most simple way to trade. Okay? This is the most simple way to understand the mechanics of how our market works. Because if that offer is moving higher, it means that sellers are seeing buyers. Sellers set the price in a market, not the buyers. The sellers set the price according to the amount of buyers or customer traffic that's coming in. Does that make sense? So you see a buyer, you raise price. You see buyers are walking away, you lower price. Make sense? Real simple. Really, really simple. Okay? Exactly, right? Can we get them to pay 52? No. If they don't pay 52, let's see if they'll pay 51 and 3/4. Okay, they pay 51 and 3/4. Now let's raise the price to 52. Oh, see, they're paying 52. Well, they pay 52 and a quarter. Oh, they did. See? Now, if you're a fast trader, what you can do is you can buy that 51, 51 and a quarter here, put your stop there, and then sell into the 52, 53 level. Right? Because you've marked where the sellers are, you know where they're going to sell, right? So you can see that the smart money who's long here, they're selling here and here because they know that there's a seller here, right? So simple, but so overlooked, right? So simple, right? If you know where the sellers are going to be, right? Put your sell orders out ahead of that. Undercut them. Make sense? Okay. So now London's opening. We have a double top. A lot of people automatically short that double top. So if you are short that double top, you know that there's stop selling here at 51 and change, right? And if it takes out that double top, you'll be looking for up here in the 58, 59 area, right? Make sense? And you know our next seller is going to be up here at 57 and change. Let me know if this stuff speaks to you folks. What I'm trying to do is I'm trying to help you guys understand how the market works, and this way you can, you know, you can plan accordingly, right? Because we're going to have to start taking more trades that are away from the edges as these markets get more and more complicated. In order to do that, your situational awareness is going to have to be really good. You have two options. Adapt your trading style or trade way less, you know? So those are really your only two options. One is to like not trade because it's not at an edge. And for a lot of people who are very emotionally tortured, I seriously recommend that, right? But for people who know how to execute, you're going to have to work on your execution, rewind charts, look and see how you can modify your execution away from the edge, but you're going to have to pay attention to these details. Because if you don't, you're just going to blow up accounts, right? It is possible to make money away from an edge. The problem is your level of concentration and focus has to be 100 times what it normally is, okay? So unless you're focused and totally dialed in, don't trade. Make sense? Right, so I bought one at 51 and a quarter. I bought two micros and I sold one at 53. All right, I'm going to get out of this early, right, because I'm talking. I'm out my last contract at 53 and a quarter. Just on 2 micros because I was testing to see whether that 51 quarter bid held. So I bought 51 and a quarter. I put my stop just there, and then I knew there was going to be a seller here. So I sold into this, and I sold where the seller would sell. Now for larger traders, right, we fixed that poor low. I mean poor high, sorry, poor high. So now let's see if we can bring in some more buying and do this because your upper target's going to be 59. But you know that there's a seller at, just around 57. So if you're still long, say you bought 10 contracts here, sell two, sell two, 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 two. Put your sell orders out so the market takes you out as the market goes. Does that make sense? Right, so into these big moves, these breakout moves. Now, if you are long, right, say like if I had bought 10 contracts at 51 and a quarter or 5 contracts, what do you do into this move? You sell into it, right? That's what smart money does. Smart money positions themselves where they see buying interest and then they sell into this move higher, right? You don't want to try and buy 55, 56 to sell at 59. That's the rookie play. If you're long 51, if you're long 51, you should be selling into these 56s. Do you guys understand that? Now, a lot of you will look at this as a breakout, right? There's nothing wrong with breakouts, but you should be selling your inventory into a breakout because a breakout is a liquidity creation event. Get it? Give me some feedback. Are you guys understanding what I'm saying? When a market breaks out of a range, you have created buying, right? Buying is created from people who are trying to cover their short and then the FOMO longs. Do you see how quickly it came back to that old overnight high? So if you were long 51, 52, and you did not sell into those 56s, you just left a couple of points on the table, right? And this is why people sell into strength. That's why smart money sells into strength. That's why I was out of my contracts when the market moved up. Okay? You don't want to buy a breakout. See, now the people who had bought 55, they're getting stopped out, right? Sometimes a breakout is sustainable. Sometimes it's not. How do you tell the difference? Well, what you do is you don't buy the breakout. As a matter of business principle, you will not buy the breakout because in most situations, okay, what's the situation now? Is inventory above us or below us? So what's a simple way to tell whether a breakout is going to have follow through? So where's the inventory? Remember how we do that checklist in the morning? The inventory right now is above us, right? So that breakout is being used to sell. It's a temporary situation that allows wholesalers to get rid of some of their inventory because the market sold off and everyone's long under 75.47. So they're using this to sell or lighten the load or go get some cash, right? Because you had to buy a bunch of inventory from 75.47 all the way down here to 75.34. So if you were long, right, you got to lighten the load, right? Makes sense? Right? If you had inventory here, right? You see this buying as an opportunity to turn that inventory into cash. And that's what the traders are doing, right? So what they're doing now is they're going back and forth between 75.53 and 55, and they're selling this inventory that they're acquired here, up here. It's slow, right? So that big breakout trade that you were hoping for isn't happening. But now you understand why it's not happening, right? Okay. Questions? Now, what I'm talking about there, that's for smaller traders, right? How do you know if a breakout's going to fail? Because the inventory's above us. So if the market's trading, like right here, check this out. The inventory's above us. So this is what I was talking about. This is the accumulation of that inventory, and we're going to sell it as quickly as we can. But if you're in an uptrend and you do this and then you break out and there's nothing up here to sell into it, then the breakout has a better chance of working, right? The liquidity creation is event because you run the upper stops, so the short sellers come in and then the breakout traders come in, Marcus. So you have two sets of buyers, right? You have two sets of buyers, right? And that brings in, those buyers, they're the liquidity. Got it? Okay. It's really, really, really simple. If you understand these concepts, at least, at least you're not going to throw away money by taking trades that don't make any sense, right? And look, remember we said there's going to be a seller right here at 57.5, and golly gee whiz, there they are, right? Now, what other trading room is going to tell you where there's going to be a seller if you're long, right? So depending on the size of your account, if you're a small one or two, three contract trader and you were buying the 51s like I was, you would have sold into the 55s or the 56s, right? If you have a bigger account, you could hold through that move back down and back up or even add to it and then sell the 50 cents, but that's a risky move. And you have to have the capital to do so. Does that make sense? So if you're a new trader, if you're just developing your skill, right, you need to rewind this on the chart and dig into the price action. If you know they're going to be selling at 57.5, you want to sell 57, 57 and a quarter before, right? So we told you where to buy, we told you where to sell. We told you why to buy, we told you why to sell. So there are valid business reasons for taking these trades. There's nothing to do with FOMO. Now look at the markets come right back to 55, right? You know because of market profile that there's going to be supply here, right? There's single prints when the market broke the G low of yesterday. So the inventory is trapped above 82. Is there any surprise that they're going to be selling here? I mean 62, right? It's not a surprise that they're selling where they are, is it? So this way you have a tactical advantage because you know where the sellers are going to be if you are long. You can't get any more simple than this, right? You cannot get any more simple. If you were long 10 contracts between 51 and 52 and you didn't sell them on the way up to 57, I'd fire you in a New York second. Always scale out. As soon as you're long animal, you put your sell orders out there. You don't wait. Exactly, exactly, exactly. That's exactly how I trade, and that's how people have been trading. That's how smart money has been trading for 300 years. If you buy a position and you put your sell orders out and your sell orders do not get executed, it means that somebody is undercutting your price and you better get out of the position before those people come and knock down your entry point, right? That's why people hold a trade, it goes into profit, they get greedy and don't sell, and it comes back on them, and then it goes under their entry and they keep buying, right? It's a fool's game, right? Be smart, right? Right? Be smart about it. Okay? Don't worry if, if you're not short and didn't make 30 or 40 points. I just showed you a way to trade away from an edge where you could make a little bit of money. When everybody else is sitting losing money or sitting on their hands, that's how you trade with a tactical advantage. So you understand that inventory is above you. So when you are going long, you're not expecting the pot of gold at the end of the rainbow. So you're not delusional. You've gone and marked out where your sellers are. So if you're buying 51, you're selling 52, 53, 54. If you've got more contracts, you know there's going to be a seller at 57 and a half. We went to 57 and a half to the penny. We went there to the penny. You can't get any better than that. There is no trading software. There is no specialized DOM. There is no quote unquote BS order flow indicator that is going to give you the information I just gave you. And guess what? It's free. All you have to do is to be able to pay attention and then to execute like a professional, right? Just buying and selling and buying and selling, and people who are just jumping around, they're not making any money. Your trades have to have a tactical advantage. They have to have a business reason for taking the trade. There's no sense trading if there's no business reason to take the trade. See, look at that. Now we're going to come right back to 51 and a half, right? So if you had bought that breakout at 55 and you didn't sell at 57, now you're underwater and you're adding to the trade, and now you're blowing up your account, and now you're screaming and cursing and you're saying the market is rigged, right? Sound familiar? It's not rigged, it's just that you have no clue what you're doing. So come into our trading room at tradingsyndicate.org and we'll teach you, right? The reason why you're not doing well in trading is you have no clue what you're doing. It's as simple as that. And don't feel bad. We've all been there. I've been there. We've all been there. It's not like I started retail trading and I made $1 million in my first month. I struggled. I had to relearn everything going from institutional to retail. It's even worse for you guys because you have no clue how the business works. I'm not teaching a market making course, but I'm going to teach you how the market works so you can make intelligent business decisions, right? If you were going to open a sandwich shop and you don't know how to make a sandwich, you're not going to do really well, right? If you're going to, open a donut shop and you don't know the first thing about, making donuts, that, your donuts taste like dirt, nobody's going to buy them. You have to have some common sense, right? And that's what we teach. So when you go long, put your sell orders out. If the sell orders do not get executed, it means that the inventory that you hold, the stuff that you bought, is not priced at where you think it should be, which means you need to get out of that and turn that inventory back into cash before you lose all your cash. It's not a risk reward thing. It's a common sense thing. See how we came all the way back down to that 51 area? They stopped selling and now they're lifting the offer. This is a distribution balance between 51 and 56, 57. And they're distributing the product they bought in size under 47 from the early Globex liquidation. I'm the first person you heard talk about trading size. That's because most trading educators used to be waiters and computer programmers and things like that before they started trading. Right? I'm I'm a I'm a wholesaler. I have been a size trader since the get-go. The very first deal I ever worked on for a client, we sold 7 million shares of a stock from 30 cents all the way up to $210 a share. Right? I've always been a size trader because I have traded for the people who are the smart money who finance these companies that you guys see. Right? So that changes, your perspective changes everything because you understand how size operates. And size is what moves these markets, right? These people acquire inventory and they're just waiting for you guys to come in, right? It's like buying a whole bunch of TVs and then when you open the door to the store, everybody comes in to buy a TV and you get to sell your inventory. That's why they call it a market, right? That's why it's stock market, futures market, currency market. The market part of it tells you that someone's selling you something that they bought much cheaper than you're buying it at because their job is to make a profit. Now, of course, always that doesn't happen. Sometimes you have to mark down inventory and take a loss to save what's remaining of your capital. That's how life is, right? But overall, these people are making money, right? They're making money selling you something that they bought much cheaper. Okay? So I want you guys to be aware of that and trade accordingly. Right? So we're going to teach you how to have good habits. Right? We're going to teach you how to have good trading habits. All these things like FOMO and revenge trading and all that stuff out the window. Right? And you're going to make good business decisions. Right? And the thing is, once you find a nice balance zone, you can just trade it back and forth. Like, for example, if you just came in right now and looked at this and went, oh, you know what? I see a bit of a balance zone here, right? I see them selling here or somewhere here. I can just trade it back and forth, right? You mark off the balance zone and then you watch and see when it looks underneath and comes back up, you can buy 51, put your stop at 50, sell a little at 52, 53. Right? And if it's still going, you can sell it up here. Now you can see that they're selling into it here. Break it down. Don't be afraid to break it down and dig in. Look, there's sellers here. The sellers are now moving down. Eventually, are people going to want to buy this? Will they come back down underneath 75.50? That's what you're looking for. You guys understand? Is that clear? Now, for those of you that I've always preached about taking trades at the edges, I know this is different, right? What I'm trying to do is I'm trying to teach those traders who are more of an intermediate level, right, on how to carve out some money. It's not easy, right? And it's actually really, how I usually say it's simple, right? But if you use what I taught you about trading at the edge and you adapt it for trading away from the edge, the principles and the business reason for the trade still apply. Okay? That is still the same. What you're doing is you're adapting and you're trying to improve your skill set so you have different tools to trade different types of markets, and that's what we were talking about yesterday. So say if you're long 51, 52 again, you're selling the 54, 55, 56, you know that there's going to be that seller up at 57 and a quarter, right? What we have inventory below us, right? The overnight inventory, which right now, that's a good question, Italian trader. So right now, the short-term business agenda is to get rid of that inventory. Over the last 24 hours, the agenda was to flush out the long inventory above us. But that long inventory is asleep right now, right? Because what time is it now? It's like 3 o'clock in the morning in New York, right? So the agenda now is under the cover of night while everybody else is sleeping. We had to buy it. Like if we were market makers, Italian trader, we'd be going, oh crap, we had to take in a lot of inventory in that sell off yesterday, right? We had to buy all of this crap. Let's see if we can get rid of it tonight before anybody wakes up. Know what I mean? Right? That's the human element of markets which does not change. Right? That human element does not change no matter how many algos you have. There are still human beings who are long who are using algos. Now let's see if we take out that 57.5 and put in a new high. We've got a double top here, right? The more sellers, the worse the competition, right? That's why Globex is a great time to get rid of inventory because you have less people to compete against, so you can get better prices. See how it all makes sense when it's explained in a common sense way, right? People say, "Oh, it's the Asian Open and this and it." Has nothing to do with any of that. It just has to do with inventory. These dealers got long yesterday. They got long in the overnight. So right now, their main goal is to try and get rid of as much inventory as they can before people start waking up in New York and hammering it out. So if I'm long, say, I'm a dealer and I bought, what's the overnight volume? There's 99,000 contracts traded in the overnight. So say I'm a dealer at Jane Street, Citadel, whatever, and I'm long 2,000 contracts here and 2,000 contracts here. Can I sell at least half of my position up here? Can I be flat? Can I get rid of those 4,000 contracts before New York opens? Because now I have a nice pot of cash to do business with for the next order of business. Does that make sense? Cool. Good. Right? And that's what this 23-hour market's about. What we call Globex or the nighttime markets allow traders who get caught short the day before, it allows them to come and cover because there's not as much buying competition. Those who are long get to sell their product higher because there's not as much selling competition. That's why these nighttime markets allow traders to do business and turn their inventory into cash or buy inventory if they're short. That's why a lot of times you see a market go up really, really high and high close at the end of the day. And then at night, I always tell you guys, look for Globex to backfill, which means for them to put it on sale a little bit and allow these large traders who got caught short to do some covering, right? That's what we're looking for, right? So they can finish up old business, right? Order flow, and that's a good thing that you said that, Italian trader. Order flow is created by an agenda. So people don't put in an order to buy or sell 2,000 contracts just arbitrarily, right? If you're long 2,000 contracts, your agenda is to sell them. If you're short 2,000 contracts, your agenda is to buy them back. The execution of that agenda creates the order flow that you guys are trading. Right now, you don't have to know what every trader is thinking, but when you see a market that is sold off, you can envision the people who had to buy it, the people who bought it, the people who got their inventories got full on the way down. Now they're stuck with all that inventory. They got to do something with it, right? They just can't hold on to it. They would like to get rid of it. So even if they get a tick or 2 ticks or 3 ticks, right? Run 1,000 contracts through 1 tick. It's 12.5 grand. So I buy 1,000 contracts at 55 and sell 1,000 contracts at 55 and a quarter. I'm still making money, right? That is a wholesale business. And there is a huge wholesale element to this business that nobody talks about. The reason I talk about it is because my entire job was working with wholesale traders. Because you guys would send in your buy orders, the wholesale traders would get those buy orders, and then they would call me because I was the seller. Get it? So if George went to buy 5,000 shares of a stock, or let's say George went in to buy 50,000 shares of a stock, that order would go to a company called Knight Securities or Citadel. Citadel would know that I am an interested seller because I have a relationship with that wholesaler, right? And so they'd call me and say, JJ, say the stock was $1 bid, they'd go, JJ, I can pay the bid for 50,000 ABCD. I'll sell you 50,000 at 97 cents. So the wholesaler would make 3 cents for making that call to me. So on that 50,000 share order, right, the wholesaler would make $1,500 for a 10-second phone call. And I would give him 3 or 4 cents all day, every day for showing me the first bid. Because now my client has sold 50 grand worth of stock because we get shown the first buy order. You guys understand that? That's why I'm telling you guys to sell into strength. Because when this market shows you a bid, hit it. Get it? Do you guys understand what I'm talking about? Do you understand the business? Okay? And that is the relationship I had with wholesale traders. That's why I understand wholesale business. And I've never thought like a retail trader. So that's why this stuff is beneficial for you guys. And that's what we keep teaching, how to use these techniques and put them into a simplified trading setup so that you guys can make good, intelligent decisions, right? Yes, and Raj, wholesalers use the spread to make money. Yeah. Right, they're not position trading. Now you understand why overnight corrections happen, right? Great. Good, good, good. Thank you, everyone. Are you guys clear on what I've been talking about? Now, what are you going to do now? You can see that there's a short position here. So you're looking to see whether or not, see, now this is exactly what you're talking about. There's longs that are trapped here and shorts that are trapped here. What's going to resolve itself first? And the answer is a big fat, we don't know. So at a point like this, when you have two contradicting data sets or two contradicting things, you can see they're still selling into it here, right? So what you want to do now is you need to sit and watch this. If you're a short seller, your stop will be here. And you're looking for bids here at 53 if we fill these single prints. And the next lower stop for you would be down here at 51, the low of L. Okay? And that's how you use market profile to trade this out, right? So under normal conditions, we should come back down to 53. Right? If these single prints do not fill, the market will rotate back up and these sellers will lift their offers up to 59.60. Okay? Thanks, everyone. Right? Come into the trading syndicate. We'll teach you how to do this. We'll teach you how to make money when markets change. We'll teach you how to understand when markets change. Okay? And then we'll teach you how to adapt your trading so you can make some money when they do. Right? That's one of the hardest things. And this market, it's going to be like this for now, then it'll change before RTH. Then it'll change during the day, right? How do you adapt to that change and how do you take advantage of it, right? See how the single prints are filling? This is normal, right? See how those short sellers that were trapped, now they're getting product, okay? Great. Thank you, everyone. Appreciate you guys. I'll be back at around 9:15 a.m. Eastern Time, 2:15 UK time. Thank you so much. Have a wonderful, wonderful day. Bye for now.